Well, good morning and or good evening, traders and friends, market enthusiasts right around the world. You're here with James once again on behalf of Pivot Point Trading as I bring you this pre-market update as we transition into the trading session of Wednesday. What I'll do over the next maybe 5 to 10 minutes is recap the first two trading sessions of this week. I'll also have a quick look at the weekly chart and show you this monthly MACD sell signal, which once again is setting up. We'll then fine-tune our analysis approach. We'll go through a little bit of trade management and we'll recap some of our top 12 individual trades as they are at the close on Tuesday. So let's move into the analysis. This will not be talking about that larger cycle, that stock market cycle, which I put out in the video before. I'd encourage you to have a look at that video. If you haven't already witnessed it or viewed it, is it a coincidence or is it something bigger setting up? Time will tell, but at the moment, this is more of a molecular analysis video where we're going to go through the daily charts, which are most important to us as technical swing traders and people who swing trade the market week to week. Now let's start with the Dow Jones Industrial Average. On Monday, we've seen some form of a hybrid type of candle set up. This is also true on the S&P 500. So the Dow Jones Industrial Average and the S&P have got very similar types of patterns in terms of candlesticks. Now, as I said, this is a hybrid candle. It's some form of a long day Morobozu mixed with a one black crow reversal. Both very bearish candlesticks when they set up in the right location. This location is perfect because if I zoom back out on a little bit, you can see that we're heading back up into multiple areas of resistance, and it is setting up again the third consecutive macro lower high if we take into consideration the May year-to-date and all-time high on the Dow Jones Industrial Average and also the July peak. We haven't actually surpassed that in the month of November. We're starting to see the early signals that this market is exhausted. And then on Tuesday, we've seen the market itself just tread water. We didn't really see a momentum move to the downside nor to the upside. We were sort of bipolar. We're moving back and forth, down and up, and we closed relatively flat, up 27 points. We were down intraday on Monday, closer to 220. I think we closed down 170 on Monday. The net movement week to date or on the weekly candle so far is somewhat bearish, and this is what I wanted to transition into. If I change to the weekly type of signal which is setting up, this is looking very, very nice in terms of a slowdown in this most recent bull advancement. What we are setting up on a weekly chart is what we call a tweezer top. Now, if we go back into the past, or if we go back and reference some of the previous tweezer tops which we've seen throughout the year of 2015, two stand out to me clear as day. We've got this one tweezer top over here just before we made that May year-to-date and all-time high. That led to the sideways stagnant market, which ultimately led into the August capitulation. After this most recent or the previous tweezer top, which I've just spoken about, we had one just before the August reversal. So you can see we've got one just above, we've got two over here, and this as at Tuesday. Again, we've got 3 more trading sessions to finalize the weekly candle. If in fact we even close near the lows on Monday, it's going to set up that perfect textbook tweezer top weekly reversal on the weekly chart. So please pay attention to that potential tweezer top on the Dow Jones. And if I change to the S&P 500, we have a shooting star the week prior, and at the moment we've got a hangman candlestick. So we do not have what we call a tweezer top, but it is definitely 2 consecutive weekly candles, which is saying, hey, be very careful if you're wanting to jump into this market and start getting into a bunch of bullish trades. It's really the reckless thing to be doing, a very foolish strategy, given just how far we've advanced since the August and September lows on all 3 of these US markets. The the NASDAQ is potentially maybe the most bearish of the 3. You may be saying, well, why is that? How could this potentially be the most bearish of the 3 when we're so close to the all-time high? The reason why is because we've been speaking about, well, is this the potential, this little gap over here, the potential of an exhaustion gap? Right where a right shoulder would set up on the market? And the answer to that question is, I'm just not sure at the moment. We still need price to break below 4,975. But if in fact we do, this is a very bearish signal. It's what we call an exhaustion gap, which may lead into another gap or another type of chart pattern, which we call an island reversal candlestick or a chart pattern, pardon me. So pay attention to that. We do not have the signal yet, but there are definitely some very ominous signals once again showing up at these multiple areas of resistance. We just haven't seen the follow through yet. We're very close to seeing it. I think we will see it probably before this week's end. And if that is the case, we will see that perfect tweezer top on the Dow Jones Industrial Average. My trigger still stands firm, 17,600. $1,033. If in fact the market has the momentum to push below that level, I will start jumping into long-term puts on the market, and my stop on that trade will be above the most recent swing high, which we have established in the month, or really early in the month of November. It was really the second trading session dating back to the 3rd of November. It was a Tuesday when we eked up the monthly high. Since then, for the past 5 trading sessions, the market has stubbornly tried to correct. If anything, it's just simply moved sideways. It's really just stagnating once again. And it takes a little bit of time for a market top, or at least, what we call a dumpling top, to actually set up. We may see a little bit of counter trend movement. We may see, a little bit of a bullish candlestick on Wednesday or Thursday, but ultimately the movement or the momentum of the market is starting to shift at these higher levels. So please pay attention to that. Don't go out there and place a bunch of bearish trades or allocate your account to overly bearish trades at the moment. For me, I'm just cherry picking individual trades and also waiting for the DIA puts to enter into again, or at least have exposure to this natural correction from this very overbought market. Again, I've referenced this over and over again. I believe it's the 5th time since 2011 where the market has been this overbought or even oversold. So this type of reading which we're seeing in terms of the ADX signal, if I just change the ADX, is very, very rare. And when it turns down at an all-time high or during a bullish mania type of phase, when the ADX signal turns down, it tells you, look, be careful. The trend itself, or what we have established for the better part of a month, is starting to reverse, if not slow. So please pay attention to that ADX signal. Outside of the 3 US markets, the US dollar has had a pretty impressive week. I'll quickly show you this if my chart wants to work with me. Here's the US dollar index. Again, it's just taken off really since late last week. I had a very interesting talk about the dollar in last week's pro analysis class, which is up online. You can see the breakout trigger just above this 100 level, 100.64. And if that happens, the US dollar, in my opinion, has another 13%, give or take, of potential appreciation to the upside, where we then start to interact with the long-term monthly chart on the US dollar. If I zoom out and show you this, I know it's not very clear because I am recording off my MacBook at the moment, but if you connect the data back to 1986 and also back to 2000, 2001, and you see we've got this long-term downward channel in effect. We've got price targets all the way back up here at about 113.74. So ask yourself the question, if the US dollar is depreciating, where are commodity markets headed? Unfortunately for the gold bugs, if I can bring this chart up correctly, ticker symbol GLD, the US dollar has potentially 13% to run. I know this is probably going to upset a few people listening to this video, but we may see gold again depreciate or lose purchasing power. It may move back down to about the 85 area on the ETF. And the reason why I'm coming up with 85 is not only because it is a very strong support level, just above this level here, or just below this level over here, dating back to 07, 08, 09, when we simply move sideways, but it's also about 13 to 14% from the 100 level. So 15% of 100 takes us down to $85 on the gold ETF. The same is true for silver. Again, these commodities have been absolutely beaten up most recently. I will be bullish on commodities, but I need a few technical signals to change in order for me to jump onto the bullish bandwagon. At the moment, price is below the 100 and the 200, and it's just simply making a series of lower highs and lower lows, the textbook definition of a bearish trend continuation. So I just thought I'd throw that in there while I'm going through some of these individual trades. Apple at the moment has seen a nice little gap. There was some fundamental news. I think there was, a 10% slowdown in some of the parts used for Apple products. There hasn't been as much demand for Apple goods. Because of that, they're assuming that production is slowing. Apple today was down very close to $4, a pretty bearish day, but the candlestick itself is a spinning top. Once again, reflecting indecision, a big gap down. It generally when we see a gap down in a stock or a market, people will buy it, and if we gap up, people will sell it, and then we generally end with these types of candlesticks. But if you scoot your trigger down below 115.50, very good opportunity down to 108.29, paying very close attention to Apple. Amazon this week has stopped out. It has stopped out for a very, very profitable trade. Although I missed it, I didn't take the bullish trade in the face of an overheating market. You can see our exit up here, 655.90. We actually hit that on Monday. So we captured, for the people who took the trade, they captured about $28 of intrinsic value into those calls. So congratulations if you took the Amazon trade. You had a little bit more guts than I did, but hey, it paid off really well for you, and you were rewarded, pardon me, quite handsomely if you took out a couple of call contracts on that Amazon trade. Boeing Airlines again is starting to break below 145.39, very bearish. We'll just quickly change to the Bollinger Bands. We're pulling away from the top. It's looking like it wants to roll. Just pay attention to this 18 simple moving average. We may see a couple of days of continued sideways movement, but if in fact price does break below this 18 smooth simple moving average, we will see this stock move back down to about 140 and maybe even down to 134. Baidu again saw a big reversal. Pardon me, not Baidu. This was a different stock. I will get to that stock, but Baidu itself has just seen pretty much a stagnant move, still moving sideways. It hasn't triggered, so not a lot to update you on Baidu. Caterpillar is starting to drop, 72.14. The entry, it's looking very, very weak. It's starting to find very strong resistance at that declining 100 simple moving average. If you are in the trade, place your stop above Monday's candle. It's looking very, very nice. Just give it a little bit of time as the market shakes out this top. CVX is poised to see a breakdown below 91.39. Pay attention to that trade. A very nice looking trade. Google again is simply moving sideways, so we haven't seen the bigger move or as much of a move as we did on Amazon. Amazon took off when it broke above the high of the earnings candle. Google itself has just moved sideways, so if you're still in the trade, just tighten your stop on it. This was another stock where I didn't jump into the bullish trade. The reason why is because the market itself is very, very overbought. It's almost getting to the point of exhaustion, and it's only a matter of time until we just see that natural correction in the three US markets, and we'll monitor that when it happens. Goldman Sachs, very close to triggering today, 195.17. The low was 195.27, so 10 cents, very close to triggering into it. But this is where I'm moving with this analysis. This is looking very close to the Tesla type of drop. You see how we had this really nice bearish trade on Tesla. It was the breakdown of the gap, the reversal. We'll have a look at the similarities between this little gap up, which happened early November, and also the little gap up we've seen in Goldman Sachs. Not only that, but we're pushing back up into this declining trend line, and it's looking very, very weak. Although we do have a bullish gap, we've got a very nice reversal type of candlestick on the Monday. Tuesday, we almost broke below that level. Buyers are still trying to hold this up in the face of the market moving higher, expecting the market to move higher. It's only a matter of time until this breaks 195.17. Keep it on your radar. IBM is very, very exciting, isn't it? I mean, here we are, 135.39. We're pretty much at our entry price. If this level breaks here, which I expect it to happen, we're going to have a target down here at about 126. So pay attention to IBM. Lovely trade setup, very weak. In the face of a strong market nonetheless. So, I mean, if this market turns, IBM is going to be one of those stocks which sinks. Netflix today has seen a little counter trend move. Nothing to be concerned about, 108.38, but I mean, really, this has just got so much resistance written over it. I'm still very excited about this trade. Bring the trigger down just a little bit, 107.86. I'll move it down just slightly lower, 107.51. Target is down here at 97.48. So we have a lot to drop in Netflix as well. $10 potentially to the downside, so don't forget about Netflix. Tesla I've referenced 224. It's looking very bearish down to 206.53. I missed this trade personally. I wish I took it, but hey, I'm just waiting and buying my time for the right opportunity to enter into the market short. And to conclude with, we've got Walgreens Boots and Alliance just simply moving sideways. Again, if this level breaks at 81.24, we've got lower lows to make in Walgreens Boots and Alliance. If I zoom out again, it's looking awfully bearish. We had that lead up into earnings. Price was going berserk. We got that very quick reversal, the 2-day type of reversal. This is what we call a one black crow, really a perfect one black crow. And since then, we haven't been able to break above the high of this candle. We're just seeing the beginning of a continuation of weakness in Walgreens Boots and Alliance. So I just wanted to bring this to your attention. As at the close on Tuesday, and as we move into Wednesday's market trading session, or the trading session of Wednesday, just stay patient. Stay patient on this market. Don't be jumping into any market trades at the moment. We do not have confirmation. We got very close on Tuesday, but still price hasn't confirmed. We may move sideways for a little bit longer. We may see a little bit of a bullish bounce and get a little double top on the market. Time will tell. We'll just follow along with it. But this is a really, really smart and intelligent entry on the DIAs, which I'm very much so excited about. Other than that, traders and friends, market enthusiasts right around the world, I hope you have a fantastic Wednesday. I will be back to recap these markets when we have some clearer information, or when a really nice candle presents itself on the daily chart. Until then, once again, remain disciplined and patient, and the trades will form and they will continue to break and ultimately reward us very, very well when this market does turn. Outside of that, have a fantastic day. It's James signing off on behalf of Pivot Point Trading. Goodbye.